Hey traders, before we dive into today's Russell 2000 trade setup, let me quickly share something that could transform your market knowledge. At macroops.com, we specialize in global macro research and deliver multiple free newsletters every week packed with valuable insights. If you're serious about understanding market dynamics, head over to macro-ops.com and sign up now. Trust me, it's worth it. Now let's talk about a specific trade setup that I'm eyeing on the Russell 2000 futures. But first, before we do that, let's set the stage on the context of market regimes. Understand the market environment that you're trading in. This is super important to, well, trading the right trade with the right market environment. I break it down into directionally. We have a bullish, we have a bearish, or we have a neutral market environment. And then we have high volatility or low volatility. So a high volatility bull market is kind of market toppy. And a high volatility bear market is like a major market bottom. In the middle is where the majority of trading actually happens. And if we're constantly optimizing for those edge cases, we actually miss the real opportunities here. So the neutral market regime, what we're currently looking at in the Russell is a mean reversion environment. This isn't the place that you're looking for a big trend to catch on to. This is actually where you want to be buying the dips and selling the rips when the markets are hitting top ends of the range or bottom ends of the range. Now, these bottom ends of the range doesn't always mean that they hold. Sometimes they break and they go lower, and the same goes for top ends of the range. You can see we went up to the top end of the range, came down and put in a new high and then came down. This is actually a feature of mean reversion markets. It's this precision that you try to put in around these edges that really like pull traders out of these trades, and more importantly, kind of convince everybody that a big trend is about to happen only to watch it just implode. So the first thing we need to understand about the Russell 2000 is it's an index of the 2000 small cap, like best performing small caps in the public markets. And unlike the S&P 500 or Nasdaq, which is actually those are big cap indexes, if a company is successful in this Russell environment, it actually leaves Russell and ends up going into S&P or Nasdaq. So it's constantly kicking out the good ones and bringing in replacements for potentials that are going to give a estimate of what the Russell, the small caps, these certain small caps that have a potential to make it to the big leagues. So we can go back and take a look that for the most part, while the S&P 500 and Nasdaq have been up, 25% year over year for the last couple of years, the Russell really, if we start out in 2020, the beginning of 2024, we go 2100 to like 100 points. So that's like a 5% gain on the Russell in 2024, whereas you had about a 25% on Nasdaq and S&P. So if we go back and look historically, there are definite periods of time where we do get big spikes in price. And you can see coming out of March 2020 was one of those periods where it just went higher and higher and higher and higher, right? But for the most part, going back to 2017, it kind of just spent a lot of time sideways. That's pretty common for the Russell. What I want to do is I want to find a place towards the bottom of the range where I can buy, knowing that my risk management is pretty much, if it goes lower than that, I just stop myself out and I only lose a little bit, but more my potential to the upside is a little bit higher. So a couple of ways we can do this. One thing I have over here is the volume profile for the year of 2024. And you can see that the majority of the volume traded last year at this like 2100 level. This is called the point of control down here. And that's going to be a solid area. Now, the top dotted line this represents 70% of the volume for the year. Okay. So looking back now, when it started to try to take off and then it couldn't, it comes back and resets at this level. Okay. Down in here, we're at the bottom of this range on the bands, right? And we're at the top of last year's major volume area. And you can see that size of that node was quite large. So there's a lot of support here. If it fails, it could probably drop down to that 2100 area again. But we have an opportunity for this to move up to this higher volume area up at around 24, let's call it 24.30. And we're currently trading at 22.70. So that's, what was that? 22. I got in at the trade at 22, let's call it 22.80 up to 20. So it's about 150 Russell points higher from here. Also note is in the middle here is this low volume area, and this kind of represents what is considered a gap. There was very little price traded in there. So I have the opportunity to make up into there, get up here and test, and then reset. Now it could very well continue on and take off and start a big trend. But when we look at how often that happens, it's actually quite rare. So I want to go for the, we're looking at 8 years of this thing spending 1 year going up and 7 years mostly going sideways. So I'm going to stick with the most likely case here, this potentially going up. And if it does start moving into a trend environment, well, then we move over to a trending strategy and we have a separate strategy to get us into those trends. Now, I'm using the SQN indicator, which you can get for free. I wrote it. It's on TradingView. Go search SQN for indicators. It'll say SQN Christie Macro Fallible. It's free. It's the one that has the most likes on it. It's not saying a lot, but people liked it. You can go and get that for free and add it to your chart. And just this, you want to be looking for this light color here, this light yellow green color for the neutral market regime. If we just look at it over time, predominantly it just flips back and forth between these two ranges. And it's spent the most amount of time just going back and forth on that. So you can put that on your chart and you can identify whether you're in a bullish or a bearish, a neutral, or high or low volatility. Right now we're in a low volatility neutral regime. And so the trade is, I got long here at, let's see where it is. I got long at 22.8350 and I'm looking for a target at 22.1150. However, as we talked about, the move is mostly up into 24.30. So I'll be looking at getting out at profit. I'm sorry, 24.27. 22.11 is my stop. So my stop is below this swing low. Okay, I'm looking for 2-to-1 risk reward ratio. So if I lose and it stops me out down here, which it got very close to a week ago, I've been in for about a week now. If it stops me out, I lose 1% of my account, and if it goes to my profit target up here, I gain about 2% on that, or twice my risk. Okay, and you might be able to squeeze a little bit more out of it, but this is where the majority of it happens. This is the kind of meat. As it gets up into this range here, we might I'll be looking to tighten up my risk and just follow it a little bit higher to my ultimate profit target. We called this trade out in the collective over at macro-ops.com. Like I said, if you're excited about this information, if this resonates with you, if you like more stuff like this, sign up for our free email, macro-ops.com. I'll post a link down below. So let me know what you think about this. If you have any questions about the trade, how you like to trade, mean reversion, the Russell, or other indexes, put some comments down below and let me know what you got. And if you like this comment, hey, give a like, subscribe, and I'll have more coming out later.